Hey traders, Raghee here. Welcome to Charts and Coffee for Tuesday, June 29. We are in window dressing mode. So quick heads up before we jump into the questions. We are looking at a market that is preparing for the end of the quarter. Now, as much as Wall Street likes to scream and shout that they don't window dress, I call BS because we know that's just not true. It's just a very simple inclination for money managers, fund managers, whatever, to basically buy more of what has been working and get rid of what hasn't. And it's not, again, regardless of whether it's good or bad or deceptive or whatever, it just is. So just anticipate going into the end of this quarter, things that have been hit hard will likely continue to be unwound. Weak markets, I would say a lot of the reflation trade will continue to actually struggle. And strong corners of the market are going to continue to excel. So your tech with focus on XLC, Facebook, those kinds of markets will likely continue to move higher. So it's just window dressing, whether it's end of quarter, it's a slightly, not as much end of month, end of year for sure, but this window dressing phenomenon is not going anywhere. It's a very natural tendency in the market, and just be aware of what it does tend to create. The other thing that happens at the end of the month, at the end of every month, is the redemption cycle. So people like to pay themselves at the end of the month. So you've got the redemption cycle. So you've got the last 3 days of the month, juxtapose that with the first 3 days of the new month, where in the context of an uptrend, we'll see some redemptions, but we'll see then reinvestment going into the first 3 days of the new month. So lots of different tendencies, not setups, lots of different tendencies happening in the market right now. So as always, thanks so much for being here for Charts and Coffee. I appreciate it. And let's get to the first question. John asks, has my Instagram been hacked? Not that I'm aware of. I'm happy to check, but here's what I will tell you. I actually had a friend of mine, my husband and I, some friends, I said, hey, I've been having a conversation with you on Instagram. My social media user ID for everything is Raghee Horner. No extra H's, no Raghee H, no numbers behind or in front. And nope, my Instagram seems to be fine. You probably were contacted by a spammer. There are more of them than sadly I can Donkey Kong. So look at the user, and this is for everybody. This is a real problem for just, I would say if anyone from Simpler contacts you via social, asking to manage your money, tell them to, well, I can't say this in public, tell them to go pound sand and seek life elsewhere. They are scammers. And so when the friend of mine contacted me and said, hey, I'm actually texting with you on Instagram, I said, tell them I said hi. So yes, my Instagram, my Twitter, I've actually never had any of those hacked. Knock on wood, never had them hacked, but please look at the username that is contacting you. There are usually some, there'll be 2 R's or 2 H's or 3 E's. It'll be some subtle shift that looks like it's me, but I assure you, we will not ever solicit to manage your funds via reaching out to you via direct message on Twitter or Facebook or Instagram or what else. LinkedIn is awful. I'm never on LinkedIn. So please tell them to pound sand. Oh, and tell them I said hi. All right. And then whatever other flowery language you'd like to use. But thank you for the question, John. All right. Next up, what about KRE? Financials have been great, whether that be the XLF or the KRE conversation. KRE is attached more to the IWM, to the Russell, to the RTY futures, while XLF is more attached to the S&P, the Dow, and they're both getting hit really hard. Take a look at the structure, right? Take a look at the structure. And let me grab my drawing tools here. All right. Once you see what is happening with the structure here, right away, the red grab, if you want to be a buyer, the red grab candles are telling you just stay away. If I could draw a stop sign, that's what I would draw. However, take a look at the bottom and more specifically, the lower row. Now you'll see the top row is red. That's more sentiment and momentum. You'll notice the bottom row is yellow. That's your trend. So your trend is not down. Sentiment and momentum, which I think is best measured by 8/13/21 EMA, that's saying there's bearishness. The red grab candles concur, right? But the larger picture is the trend heading lower? And my answer to that would be no. So that means I can look back on minor lows and the Darvis levels and sort of carry that forward and say, well, is this a low? Is this a support level where I've got a tool like a slow stochastic, a ready aim fire that says, hey, this is oversold because this is chop. This yellow means chop. Slow stochastics, ready aim fires, those are excellent tools designed to identify overbought and oversold markets. And that overbought, oversold conversation is not, again, my opinion, never, ever valid in a trend. Can an uptrend be overbought? Really, no, because it's in a constant state of imbalance, hence the trend. Can a non-trending market be overbought, oversold? Absolutely, absolutely. And so before we ever start to think about overbought, oversold, inflection points, step back, look at the environment. If there's anything that can make an immediate and noticeable impact in your trading is to have tools. They don't have to be my tools, but it has to be tools that start off with not whether something's a buy or sell. That's incomplete information. It's actually what environment are we in? So the analogy that I like to use, let's use fishing. You just don't cast any old lure into the water. Depends on a lot of different things. Let's use golfing. You just don't pick randomly any club or your favorite club out of the bag, right? What dictates what you'll cast into the water? What dictates what club you're going to grab? The environment, right? So trading is no different in that regard. Trading is no different in that regard. So keep that in mind. And then KRE, I just kind of stop at the environment. It's maybe an oversold buy, could be really, really interesting. But if I can find, Scott, if I can find trending markets and exhaust all the opportunities there, maybe it's an individual stock within the KRE that has relative outperformance in a double green that I will prioritize an individual boat stock over the tide, the sector, or the index. Okay. Thanks for the question, Scott. I appreciate it. Francisco asked, I mentioned in my Trading View video, the JT multi-trend, where can I find it and add it to my charts? So we do have a number of indicators that are available free to members, and you can find them in the futures room. We've got the JT multi for TradeStation, Trading View, and TOS in the futures room and in the sector secrets mastery room. So I do make them available free to members, and that is where you can find them. I make a lot of indicators. I have a handful of premium indicators. Some of you will know with the class that we just had, we had 2 huge upgrades, upgrade to the V-score signals, upgrade to the Darvis signals. And the cool thing is those are very much a minority of what I offer. Most of what I offer is free to members. So when they get upgraded, it's just easier to continue to do that in the room. So you can check them out and download them from either room. And speaking of upgrades and new tools and getting access to all my tools, you can still join the simpler trading, the day trading class that I did, the playbook class. I love that title. So we have the playbook class that's going to transition now into the live trading, and that starts tomorrow. So that gives you all of today to review the class, to also check out all the resources, the chart book. Those of you that took the class, the slide deck is now up and uploaded, and it's another extra 30 slides of resources. And we also have the chart book uploaded that goes along with the slide concepts of the class. And so you can check all that out. And then tomorrow morning at 9:20 a.m. Eastern, day one of live trading. I'm very excited about that. And we will be sending out alerts with the setup. So I'm super stoked for you guys, for many of you, for the first time to join me for live trading. All right. So next up is good morning. Hey there, JMO. Do I think MRO is a good buy right now, or maybe wait until after July 1? So again, July 1, great thought, JMO. So are we dealing with the likelihood of window dressing here? Possibly. Is it a double green? Definitely. Is Marathon part of a narrative that I love? On the left margin, just below the link to join me for the class tomorrow, is the beginning of the notes that I send out to members when I'm in the different rooms. And you'll notice, starting off with the Simpler Futures notes that will be part of our discussion today. Look at the first two things I put out there. Quarter and window dressing. The second one is directional bias. So JMO, you're absolutely in the heart of one of the sectors, energy, that I love. It's actually one of the corners of the reflation trade that has not been hit. However, there's something else on July 1, and kudos, we have OPEC on July 1, the OPEC meeting. If you have, if you're in the futures room, I think I posted this in the futures room, but you can check this out on your own as well. Google CME for Chicago Mercantile Exchange. Google CME FOMC watch or countdown. Either one will get you there. If you Google that, it'll take you to the CME's countdown, where it shows with a really nice little graph where the expectations are on production cuts. In other words, what opinion, what expectation has been already discounted, factored in, priced in, baked into the cake into crude oil. So it's already been priced in that the market widely believes that there will be more, look at it as accommodation. There will be more accommodation. In other words, they're going to likely increase output for two reasons. One, crude's heading higher. Why not? Two, they are actually anticipating a supply deficit come August. So it's not a huge supply deficit, but it's a supply deficit of 1.5 million barrels per day, something along those lines. So we're expecting higher output, and yet crude is still staying pretty darn strong. So the knock-on effect of a strong commodity should be benefiting the oil stocks. Just be ready for possibly a little bit of volatility, but generally speaking, something like MRO, which I think is, something that if you want to play a piece of the XOP or play the XOP broadly, you could do that with MRO. But right now, in front of OPEC, I'd rather play the sectors, the tides, versus individual stocks. But either way, if you have the structure, go with it. But I'll say right now, because all my cards on the table, we're looking long in the energy sectors. I'm not getting too specific. Schlumberger is interesting. MRO is interesting. There's a number of names that are pulling back to levels that I like. But you can also stay more broadly at the XLE, OIH, and XOP. Also, remember Frac. Remember names like Frac as well. So I love that group that you're venturing into. All right, next up is FXI. Sure. All right, John. So FXI. I am really not interested in playing China via the FXI or the MCHI. Not even KWeb, really. Could be a 1, 2, 3 forming. It's too large a pattern to be a really great 1, 2, 3. But even though we have, well, here's what I will say. Here's the most succinct way to put it. Emerging market in the environment that we're in right now is probably not going to do well. So Take a look at KWeb, take a look at FXI, take a look at MCHI. Unless you have a very long-term time horizon, unless you're looking at, say, a weekly, I don't really see a lot of opportunity at the moment in those names. So I would say you want to be a little bit more cautious about them, unless you're going to go weekly, in which case, remember, if you're going weekly, your time horizon's far, far longer. It's for me, weekly means 6 months minimum to upwards of, hopefully 1 to 3 years. So ultimately, this is probably going to be more of a time horizon, time frame adjustment than it would be. I don't want to trade it. My time horizon on this is not a few days to a few weeks. It's let me take a piece of the position, give it 6 months to prove itself, and then it might just find a more permanent, say 1 to 3 year spot in my portfolio. That's the way I look at those things. So thank you for the question, John. Let's see, what else do we have here? Good morning. Good morning. Great to see you all. Thank you so much. Let's see. Gold. Ramesh, sure. So gold gang, these are messy markets right now. Please don't look for the type of sort of harmony, cohesion that we saw the first 6 months of the year, because right now there's some odd action. For example, bonds are generally heading higher, meaning the nominal yield of a bond is lower. Nominal yield of a bond being lower, inflation being flat to, let's face it, ticking higher, actually is a lower real yield. And gold should move, historically does move in the inverse, negative correlation to real yield. So gold should be higher, and it's breaking down. So these are messy markets. There are still a lot of disconnects out there. So partly you could point the finger at maybe the strong dollar, putting pressure on gold, interest in other corners of the market that are going to yield better alpha, probably getting a lot more attention than gold. While it seems like the market might be running for cover, it's broadly not, because if tech is doing quite well, you've got high beta, high Momo names benefiting. And it's amazing how that just sucks away the attention from markets that are just not as, frankly, sexy as just the cadre of tech names that are doing very, very well. So I'm sure there's a lot of reasons we can point fingers at gold and the disconnect from the way it's moving. I've left gold alone. The move that it made on that week of the FOMC to triple witching has been enough for me to say there's no technical structure for me to use there. If there's no technical structure, there's no setup structure. Eventually, might it be oversold? Ask me if this is trading at 1730 down at that volume ledge, and then maybe GLD and GDX and maybe XME might come into more focus. But right now, I'm going to steer clear of it. So I hope that makes sense. All right. So as always, thank you for being a part of Charts and Coffee every morning. Great to have you all here each and every morning, 9 to 9:20, the Simpler Trading YouTube channel and the Simpler Trading Facebook channel. We'll see you all tomorrow, same time, same one of the channels. And in the meanwhile, be good to each other. Keep in mind, we're winding down not just the end of the month, but the end of the quarter as well. All right. Take care.